and welcome. You're watching Market Phataphat on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza, and this is the show where we tell you all the stocks that are buzzing in trade today. In a short while from now, we'll connect with our expert as well as our researchers onto the show to tell you the list of the stocks that are in action right now. But let's have a look at what the markets are up to, because the market is also in full action, because the markets are sitting at a day's highest point right now. Cheryl, we were seeing a little bit of a flattish trade, but in the last 30 minutes or so, good momentum onto the upside.
Absolutely, Shrishti. If you look at the markets, we are seeing an uptick over the last few hours and 0.3% uptick coming in for the benchmark indices. You have Nifty Bank that's holding on to gains of about 0.2% as we speak. Bajaj Finserv, the flashes were flashing on the bottom of his screen on the fact that they have announced their Q4 numbers. So Bajaj Finserv, Bajaj Finance are the top two gainers on the Nifty, followed by UPL, Bajaj Auto as well as Kotak Mahindra Bank. Remember, today we have 5 Nifty companies. You only have one that's come so far, that is HUL, and disappointing set of numbers coming in for HUL. You see in the stock also bear the brunt of that one. Talking about the list of losers, you have HDFC Life, that is the top loser on back of its earnings. HUL, Power Grid as well as Adani Ports are the sum of the losers in today's trading session. But viewers, remember that this is a show where we get you all the stocks that are moving based on news flow as well as on technicals. So let's bring on board our experts for today. We have Kunal Bothra, who's joining us on the technical front, but on the set of researchers today we have Ashesha as well as Vamakshi joining us. Very good afternoon to all three of you, and let me proceed with talking about the first stock that is in focus in today's trading session, and that is City Union Bank. That particular counter is seeing a smart up move. At one point in time, you had City Union Bank that was seeing a surge of approximately 9.6%, and this after the RBI approved the reappointment of N. Kamakodi as the MD and CEO for the bank for a period of 3 years. The stock has posted its highest intraday percentage gain since May 30th, 2022. That's on an intraday basis. And the reappointment actually removes uncertainties around the lender, especially after the weak quarter gone by, or weak Q3. And this is what Antique Broking had to say on back of this reappointment coming in. And the stock has also is also trading above its 50 DMA. The first time since December 2022. So that's the stock that is buzzing in today's trading session, City Union Bank.
Okay, but City Union Bank is on radar of Kunal as well. Kunal, what are you spotting out here? The stock is seeing a good up move.
Well, absolutely, Srishti, and I think it was one of the recommendations which I had given a couple of weeks back when the stock was showing signs of good volume pickup. So I think from 130 levels, it's moved up quite well towards 140 plus mark. Now, what this move actually could trigger for City Union Bank is positionally a breakout on the weekly charts for the stock. So what has happened is, after the sharp correction the stock had seen from 200 levels to I think at 1.125 odd mark, the stock formed a pattern of lower highs and lower lows, so consistent weakness on that kind of a time frame. But after this breakout move, it seems that that pattern has been broken out for City Union Bank. So something which is very, very interesting as well as intriguing for the stock. I would expect from current levels positionally to the stock to head towards at least 160 to 165 over the range term.
Okay, moving on to the third stock in focus, that is HDFC Life, another result candidate. And if you will look at this particular counter's move in today's trading session, the stock is under pressure on the back of the earnings, because this time around the profit figure has come lower versus the ET now estimate at 369 crores is what the company has reported. But for a life insurance company, the key to track is the VNB margins, which came in at 27.6% versus 27.6% for Q4 FY23, beg your pardon, and for FY23 that was seen at 26.5%. Talking about the value of new business in terms of the currency growth, that is seen to be at 68% on a YOY basis, while the gross premium income has shown an uptick of 36% on a YOY basis. So the internals don't look bad for HDFC Life. This was followed by a decent management commentary as well, but nevertheless the stock is under pressure, because in the past 1 month we have seen a decent runner for this particular counter. So maybe a profit booking on a decent set of numbers for this particular stock.
All right, moving on, Kunal, let's talk about Titan. And if I'm not mistaken, this was among your top pick this morning as well. Where do you see Titan headed from here on, and why such bullishness on this one?
So, Titan has started to show signs of what we call as the classical signs of trend, because on the daily charts as well as on the weekly charts, the stock is giving breakouts on multiple time frames. So for example, on the weekly time frame, the stock is forming a classic bullish engulfing pattern. Remember that last week the stock was trading with a negative bias. I think it closed some 2%, 2.5% negative on the previous week. So it was going through a bit of a profit booking mode. This week so far the stock is doing extremely well. Since yesterday the stock has been holding on to the higher levels on the upside, right from the time when the markets were a bit wobbly yesterday towards the point where the markets are a lot more stable today. So all of that gels in quite well for Titan over the near term. I would expect the stock to head towards 2750 in that kind of a time frame.
Okay, we're moving on. Saurabh Mukherjee of Massless Investment is also bullish on Titan and its jewelry segment. Tanishq, let's find out his outlook on CaratLane.
Tanishq is a play on the Titan, rather is a play on the same dynamic in India. And as we can see year upon year, the sorts of people who watch ET now, their salaries are going up, their bonuses are going up, their business opportunities available for them are going up. And naturally, therefore, Titan is driving 25% free cash flow compounding year upon year on the back of that. What's even more interesting, I thought, was how in the last 5-6 years, Titan has turned CaratLane into a very profitable e-commerce proposition, growing at 50%, right? So CaratLane makes money, real cash flow, real EBITDA, and it grows at 50-55% year after year. And CaratLane caters not so much to my better half, more to say my daughter's generation of women, people who are beginning their jewelry buying journey, buying say jewelry for 15,000, 20,000 rupees, and doing so online. So both the 80,000 rupees per item jewelry and the 20,000 rupees, Titan has basically created a cradle to grave jewelry proposition for affluent Indian women who are going to work earning money. And it's difficult to see which local jeweler can take this company on. I think at a PAT level, EBITDA or PAT level, Titan makes 4x the profits of its nearest competitor. And each year, I reckon that gap is widening. So as a play on Indian affluence, difficult to see of anything more. In the last 20 years, Titan has created 1200x shareholder wealth. Even I fell off my chair when I realized that. So 1200x shareholder wealth, free cash flows would have gone up 200 to 50x, but unbelievable creation of wealth by this company from Bangalore.
All right, that's Saurabh Mukherjee's take on Titan. But Ashesha, Tech Mahindra, this one is in focus on back of expected earnings.
Well, yes, it will be reporting its numbers later today, and we are expecting muted set of numbers from Tech Mahindra this time around. Revenue growth is expected to be flat on a sequential basis. Meanwhile, margins are also expected to be steady at about 12% on a quarter-on-quarter basis. Impact of furloughs and ramp downs in high-tech and telecom are expected to impact numbers of Tech Mahindra this time. Analysts are working with flattish revenues as far as their enterprise segment is concerned. Deal wins, however, could moderate below that $700 million per mark, which has been the run rate for the last 5 quarters. Commentary on demand and furloughs, FY24 guidance, commentary of the new management, attrition and deal win pipeline will be some of the key monitorables. So keep an eye out on TechM, which will be reporting its numbers later today.
Okay, but sticking with ITs, Vamakshi, coming to you for the next one, you have picked up LNT Tech. Tell us, why is that so?
Well, Srishti, this counter is in focus again on the back of its earnings. When we look at the numbers, they were a decent set of numbers. FY24 guidance, however, was slightly ahead of the street's expectations. Apart from that, the commentary that the company has come out with is sounding quite optimistic, and it comes as no surprise that the stock has surged over 8% in trade today. Now, when we look at the Q4 numbers, CC growth was reported at 2.2% on a quarter-on-quarter basis. We were working with estimates of around 1.5% to 2.5%, so definitely the CC growth has come in line. Revenue growth was at around 2.3% on a sequential basis. Revenue now stands at 2,096 crores, while dollar revenue stands at 255 million. Now, the company reported a net profit of 311 crores, which is an uptick of 1.9% on a sequential basis, while the EBIT margins have remained flat at 18.7%. FY24 guidance, as far as that is concerned, the CC growth is expected to be over 20%. Organic growth of 10% is also expected in FY24. EBIT margin is also expected to be in the 17% range. So overall, good set of numbers, decent set of numbers rather, and good guidance, and that is the reason why LNT Tech is in focus today.
Absolutely, that's LNT Tech seeing stellar gains in today's trading session on back of the optimistic management guidance. Let's actually listen in to Amit Chadha, the MD and CEO of LNT Tech, on the quarter gone by.
Even as the global GDP normalizes to pre-COVID levels, there are three clear areas that will attract ER&D investments and increase the total addressable market pie for people in our segment. These three are around energy transition and electrification, digital new age technologies for a variety of use cases that cover user experience, automation and communication, business transformation to optimize cost and increase returns and thereby increasing outsourcing and offshoring. Just some data points for you to take. Digital transformation spends continue and as per latest market reports will grow from $800 billion currently to $1.4 trillion in 2026. Led by cybersecurity, AI, hyper-automation, enhanced speeds of connectivity, better and higher computation and cloud adoption. The global AI market itself is expected to grow from $400 billion to $900 billion in FY 2026 with spends towards hardware, software and services.
Okay, so from LNT Tech, let's switch to LNT. And Kunal, coming to you for this one, the stock is not very far from its all-time high level. So do you believe the stock is moving towards that and a new lifetime is what we can see?
Well, very high probability in fact, Cheryl, because most of the other peers, the likes of ABB, Cummins, Siemens, etc., these stocks have seen a very good price action for themselves in the last couple of days as well as over the last 1 to 2 weeks. Now, LNT went through a bit of a correction from 2300 mark almost a couple of weeks back. The stock fell down to almost 2200 levels and now it's made a very good comeback for itself. So it's completed a breakout on multiple patterns in terms of charts as well as in terms of indicators. And I believe that this could probably be an indication that this will not be a short-lived move and you may see the stock not just hitting back above the previous life highs, but possibly even crossing about those levels and moving up significantly higher. So would have the bullish stance on LNT even going forward, and my expectation is that the stock could be a good buy on dips from current levels, expecting targets in the range of 2400 to 2450 for LNT.
Alright, moving on from LNT, let's talk about another earnings candidate, and that is SBI Life. That one came out with its numbers yesterday, post-market hours, and the gross premium income has come in below the estimates while the value of new business was in line with the estimates. And if you look at margins also, they've come in slightly higher, but overall, if you look at the numbers, they were an inline set of numbers for the quarter gone by. If you look at the gross premium income, it come in higher by about 14% on a year-on-year basis, but it was a tad missed from the ET Now estimates, which was at around 21,600 crore rupees. The new business premium came in at around 1,140 crore rupees, higher by 30% year-on-year basis. But as per ET Now poll, it was supposed to come in at around 1,450 crore rupees. The VNB margins rose by about 420 basis points on a year-on-year basis, coming in at around 30.1%, which was higher than what we were anticipating at ET Now. We are expecting it to come in at around 29.1%. So that's SBI Life for you with their numbers. But if you can see the brokerages continue to report faith in this particular counter. The stock is trading higher by about 1.3% as we speak.
Okay, but with this, let's also listen into what the management had to say on their Q4 earnings.
Numbers are the direct outcome of the scale, quality and spread of SBI Life business across the regions and the fundamental requirement of maintaining high quality, consistent and sustainable business model. The company gained private market share by 92 basis points to 24.3%. On individual rated new business premium, we stand at 152.2 billion with a growth of 18% over the previous year, while maintaining our leadership position with private market share of 22.3%. Group new business premium stands at 86.8 billion with a share of 29% in new business premium. We have collected total new business premium of 295.9 billion, registering private market share of 21.3%. The renewable endeavor to maintain our leadership position and continue to further increase our market share by offering products that meet the evolving needs of our customers. With our widespread, robust distribution network, complemented by digital technology, our innovation strength and above all, our people power.
All right, so that's the management of SBI Life. But let's move on and let's talk about Vector Foods. And Kunal, this one definitely seems to be on fire of late. At least that's what the charts have been indicating. But do you think that this fire will rage on for Vector Foods?
Fourth straight quarter so far for the stock where it's gained very good price action. So from 270 or less than that, the stock has recovered quite smartly in the last 1 year or so. Now, the reason for flagging off Vector Foods is because the stock is now just about 1% or 0.5% away from its all-time high levels. 624, 625 approximately was the previous major high for Vector Foods almost a year and a half out back. So that stock is now trying to challenge those strong breakout points, as well as the momentum in which the stock has gone into this kind of a breakout is quite commendable. So would expect this uptrend to continue for the stock. Near-term targets which I've highlighted closer to 640 for the stock. Expecting the stock to move up higher to those levels. Stop loss for this trade could be kept at 585.
Okay, bouncing back to the IT space, Ashesha, Wipro numbers are awaited. Tell us, what is the street penciling in?
Well, yes, over here as well for Wipro, we are expecting muted set of numbers. IT services revenue is expected to remain flat on a sequential basis. Rupee revenue, meanwhile, is expected to come in at 23,600 crores, which is a marginal increase on a quarter-on-quarter basis. IT services margins, meanwhile, are expected to come in at 16.3%, flat on a sequential basis given softer revenue growth that we are penciling in. In fact, we could see some weakness as far as their consulting business is concerned. Also keep an eye out on buyback. Remember, Board of Directors will also be considering buyback in the meeting that is scheduled to happen today. Analysts believe that buyback size could be anywhere between 10 to 10,500 crores, and the company as on 31st December had about 38,000 crore cash in its books. So ahead of its results, the stock is in focus today, not doing much, 0.2% higher in trade as we speak.
All right, moving on then. Vamashi, let's talk about the stocks of the day. That definitely has to be Raymond as well as GCPL. All of them are waiting for the individual press conferences to take place. But what are we picking up from sources and reports?
Well, Cheryl, you're absolutely right. These two are the stocks of the day. In fact, Raymond has gained as much as 9% today and climbed to an all-time high. Now, this is on the back after Godrej Consumer Products is looking to acquire its consumer care business. Raymond has a presence in the FMCG industry through its associate company, that is Raymond Consumer Care Limited. Now, they've created a strong FMCG platform with brands like Kama Sutra, Park Avenue, as well as Premium. And one of the top five, in fact, one of the top 5 players in the men's deodorants category. Now, what does this actually mean for Raymond? Well, it means value unlocking for the company. This also implies that the company is moving away from the unrelated segment, and in fact, it is further deleveraging with net debt standing at nearly 930 crores. And in fact, we have a report that came in from Systematic, which highlights that the company could become net cash by FY25. Now, as far as GCPL is concerned, why is the stock down? Well, the concern is that if this deal happens, it will be taken as a surprise move by Mr. Sitapati. Now, in the last 16 months, he will be deviating from his focus to revive the core business. And in fact, in his first investor meet, he had spoken that the new businesses will not be his focus over the medium term. So on the back of that, we have both these counters, Raymond as well as GCPL in focus. Positive for Raymond, GCPL not so much. Raymond up away 4%, but as much as 9% is what the gain we saw as far as Raymond is concerned.
But moving on, and let's shift focus to the banking space. Kunal, RBL Bank is on your radar, and the banks are doing and holding up themselves pretty well. What are the levels that you're watching out for RBL?
So on the monthly charts, assuming if the stock closes at say current levels of 157 or slightly higher, it could confirm a bullish engulfing pattern on the monthly time frame. This could probably be a signal of a possible big turnaround for RBL Bank, because 3 straight months of sharp selling the stock had seen. From 180-85 levels, the stock fell down to almost 130-135, and this could be a possible turn of events for RBL Bank as well, assuming this bullish engulfing pattern gets completed tomorrow. So I think it's going to be a good turn of events. Hopefully, if the pattern plays out, then we can expect 180-185 as an immediate target for RBL Bank. So for traders who have time frame of 3 to 4 months, should look out for this particular technical phenomena to play out. 180 could be a near-term target for the stock, and expecting the same range to probably come back in the next 3 to 6 months.
All right, that is RBL for you. But let's talk about now one but two counters that will be in focus. One is Cummins India as well as Tata Motors. Both of them have partnered to manufacture low to zero emissions tech products in India. Cummins Inc. as well as Tata Motors has strengthened their 30-year alliance And Cummins and Tata Motors have actually decided to set up a new business entity called TCPL Green Energy Solutions, which will be a wholly owned subsidiary under the existing joint venture with a focus on the development and manufacturing of sustainable technology products that will include hydrogen powered internal combustion engines, fuel delivery systems, as well as battery electric powertrains and fuel cell electric systems. So Tata Motors as well as Cummins, both of them in focus on back of this JV.
Okay, but moving on, and Kunal, coming to you for the next one, you have picked up HPCL, and all of these crude-related counters are in focus of late. Tell us, what are the levels that you're watching out for HPCL? Seem to be taking off its March high.
So that's the exact reason why I picked up HPCL and not the other two, BPCL as well as IOC, because these stocks have been underperformers relatively on a very smaller degree time scale. But I think HPCL looks to stand out. It's emerging as a potential breakout candidate even at current levels. So assuming if the stock closes at current levels of 250 plus, it could be a multi-week high for HPCL. And that generally gels very well with the overall view on crude oil prices, that if the crude oil prices gets into a further corrective phase, we may actually see these stocks to continue to move up higher. So HPCL looks to be a top candidate of becoming a leader from the entire OMC pack. But of course, the likes of BPCL and IOC could also play a good catch-up over the near term.
All right, moving on. What will the falling crude mean for the Indian equity markets as well as investors? Remember that the Brent or crude oil has fallen below that $80 per barrel mark. Here's Nikunj Dalmia, who's the managing editor of ET Now and ET Now Swadesh, on his take on what the fall in crude prices means for us.
This is after a cut by OPEC. Now what OPEC did, they came out, they cut the production, they wanted to ensure that they do not lose market share, and crude prices remained stable. But the demand crunch, and this is important, a cut by OPEC, crude goes up but comes back to levels where the prices were pre-price cut or pre-production cut by the OPEC. So what we saw was more like a reaction, and now the numbness in the demand is bringing oil prices down. So even on a lower production, if oil prices are coming down, that is what is important for us. There are two things which matter here. The dollar index is at 101. Crude prices have gone below 80. Now, if you are an Indian investor, this is like symphony and Beethoven early in the morning, because this is what you want to see. You want to see weakness in the dollar index, you want to see weakness in the crude. That is a clear indication that demand globally or commodity prices globally are reversing. Implications for this, yes, it's a slowdown in the world, but I would say the implications of this for Indian macros are far outreaching in terms of the positives. We all know that lower oil prices is good news for us. We all know that a weak rupee, a weak dollar is good for emerging markets and good news for rupee. So that, I think, for me is the preamble, or I would say is the biggest moot point, that commodity prices are down, crude is down, and crude has gone back to levels of sub 80 where it was before OPEC announced a pre-cut.
All right, and
with this, it's time to be entertained as the early Bollywood celebration has arrived, and get the chance to see your beloved celebrities and enjoy an unforgettable celebration of Hindi cinema. Be sure to catch the 60th Hyundai Filmfare Awards 2023 in association with Maharashtra Tourism, co-presented by Vimal Elaichi, exclusively on Colors and Jio Cinema tomorrow, April 28th at 9 p.m.
all right, and on that note, we'll slip into a break on this edition of Market Phataphat. Stay tuned, more on the other side. Don't go anywhere.